All right, great. Let's do it. AVGO. Stock is 271. Ah, Joey, I was waiting. I was waiting. Joey says an expected move of about $14. Anybody else? I actually have it a bit less than that. But anybody else? All right, Daniel, Damon, Paul. Okay. So what I'm looking at is 270 straddle, which right now is trading about almost $14 on the head. But it's $1 in the money. It's $1 in the money. Okay, so the 270 straddle is $14, but $1 in the money. So we have premium and an expected move of about $13. Puts us in expected range of 258 up to 284. Everybody see that? Okay, so 258, 284. 258, 284. Well, 50-day moving average is right down here. Remember the other day, I think it was Tuesday. Tuesday we talked about if it had gotten down there, we wanted to have an entry in there prior to earnings to get out of earnings. Never got down there. We didn't get in. Stock rallied a little bit off of there. So you have the 50-day moving average at 266-ish. The 258, okay, or what is in that range, you have this area of resistance back here, which was around 261, also became this blip of support when the stock dropped here just a few days ago or last week. So you got the 50-day at 265. And support around 259. How about on the upside? Anything on the upside? Well, if I look for resistance on the upside here, I don't really see a lot until we get back up to those highs of around 285, 286. Okay, so we've got resistance up at highs around 286, which really coincides fairly closely with the expected move. And then from a directional standpoint, what do we see here? This is definitely one I have no opinion on. I did leading into earnings, like we had talked about earlier in the week, just as a trade up into earnings. But I think we really, now it's hailing out here. Great. I think we're kind of right in the middle of a neutral zone here, and I would look for an iron condor. So I want to look for an iron condor around that, 258 and 285 area, or 257.5 and 285. So let's see if there's something here. That makes sense. Okay, this is interesting. This is interesting here. So the 260, 255, and 282 half, 287 half iron condor is 240. Now, obviously we want to see 250 on a $5 wide iron condor to get us right to 1-to-1. But let's evaluate 240 and see how that looks in terms of the expected range. So at 240, we have break evens of 257.60 and 284.90. I like it. I like it a lot. Especially with the support that we saw around 259. And then we know that there's resistance just above that around 286. I think this is a really good setup, guys, especially for not having a directional bias. What do you guys think? We can look at a strangle swap, Paul, certainly. I think vol is going to be a little shaky to look at there because of, being a $250 stock. But let's take a look at that. So let's go to the 255. And the 285. And let's just see how something like that looks. So 255 and 285. Now, volatility is pretty expensive for next week, so I'm going to really have to bash this, which is probably going to not make this strangle swap look very good. In addition, look at the market width on the strangle swap because the individual markets are so wide. So, for instance, next week's 255 put, 240 bid offered at 350. I mean, we can't trade off of that. Even the call, 205 bid at 260. We can't trade off of that. All right, so strangle swap is just not going to work. I really like the iron condor. And I'm going to put that out there. Let me put it back up on the screen here. Okay, it is the 260, 255, and the 282 half, 287 half. I'm going to put that, I mean, it's a super wide market, guys. I don't know that we're going to get filled. And actually, hang on, because I have the wrong dates. That's next week. These are supposed to be for this week. There we go. Now, what I want to do before I put that out, I want to move the strikes down. One set of strikes to the downside here. Give us a little bit more protection and see what it does. You can see what happens here. I move the strikes down and it changed the price to a midpoint at least of $2.20. Everybody see that? All right, so I'm going to put this out here, guys, and I will be right back.